if you do own these names, you've recommended some of them. Does it mean close them out or ride any kind of choppiness?
I think Apple would be the one that I would be more tending to close out or at least reduce. You know, they're down quite a bit even before their earnings, and they've kind of imploded ever since. They've been one of the leaders and had a heck of a run. And you mentioned at the top of the show, their U.S. sales are down. I think it's kind of time to take profits on that. I would hold Microsoft, that from a technical standpoint, and I know you follow these, Charles, it's down below the 50-day moving average and hasn't recovered. That's a classic rotation sign. Things like Meta and certainly NVIDIA, I would hang on to those. I think while NVIDIA is a mega cap stock, it's an AI trade, and AI is still going. It doesn't have the froth that some of those other companies do from the AI trade, from that focus on that. So I think that's really good. I think we're good on that stuff. And also one other thing, it's important to remember that tops are processes. So I think it's really foolish and it's going to cost you money if you're just looking at the market and saying, oh, it's topping right now. We got to sell. We got to sell everything. I think it is a rotation.
All right. I like that. You know, we're not just going to get to a point and they ring the bell and we all orderly exit the building. I'm also reading where you're saying, okay, industrials, home building, energy. Before you get to specific names, I want to know what those names are telling us then with respect to the economic front, where you still have a large camp in recession, a growing camp in inflation, and everyone in the middle scratching their heads.
Well, I think those in the middle are probably the right ones where they're scratching their heads, because we do have a lot of conflicting factors going on with respect to the home builders. As you know, because you and I talked about this in December, I think, they have been going up in opposition to interest rate rises, and that was kind of puzzling to me. Now, I think the home builders are continuing to be strong because the housing supply is down. You know, they did pull back their horns with respect to land acquisitions and processing. With respect to energy, I think a lot of that is because of the production cuts by Aramco. And Russia, et cetera, et cetera. I think that's a big tell. Let me jump in here,
Dan, because I know you like energy, but I guess I got to ask you about bonds. The bond yields have spiked. The 10 years above 4. The 30 years gone crazy. But history suggests if the Fed is done hiking, that bond yields should come down, and there could be money made there. I'm a little worried about bonds, but you've been a buyer, right?
Well, I'm a little worried about them too, which is why we just bought a bunch of 6 months as opposed to 10 years for that same reason. I feel like if that we are kind of at an inflection in the market, but if it just persists for a few more months, that's a rotation that we can make out of bonds and into equities if we do get a correction. So I don't see a big decline in bond rates.
All right. Hey, Dan, great stuff. By the way, congratulations. You have been spot on, my man. All right, folks, coming up.
Oh, thanks.
Can the Fed live up to the hype? I don't know. I mean, think about this record-breaking streak of interest rate hikes.